Good afternoon and welcome to the the FX Daily Wrap Up with Forex Analytics. And it's been a very quiet start to the week. We're in full bloom with summer trading. Uh, I'm just going to look over a couple of things here. And as far as look over, I mean, just reference some news articles or some news as far as that came across my Reuters feed. So be just one moment. Says the dollar was a little change in very thin trading. Foreign exchange markets quiet on Monday. Volatility low ahead of major central bank policy decisions next week. And there was a couple of comments on here was indicating from Kit Jukes, which I thought was pretty funny. But it says some analysts, however, are surprised the euro is not gaining, given that the market is priced in the Fed easing. And Kit Jukes was saying, for the world's most traded and least exciting pair, a dovish Fed, a weak dollar, and a hint of global economic optimism ought to mean euro-dollar rallies, says Kit Jukes, strategist at Societe Generale. If the euro can't stage a move back to 114 in the next week or two, what on earth could make it rally? Well, we'll see. Now, we know that the Aussie dollar is doing very well up in here, and we'll get to that. Of course, if you follow us on the, or if you was subscriber with Forex Analytics, we actually cover these pairs, obviously the whole, the majors and some of the key cross rates in the European crossover, which takes place at 4 a.m. Eastern time. It's recorded, played about an hour and a half before the New York Open, or Stelios makes it available in the chat room so you can get ready. Obviously, it's very quiet trading right now. But one of the things we did reference was the Australian dollar. It says currency most sensitive to Chinese news hit a 1 week high on stronger than expected economic data from China. China's industrial output rebounded in June from a 17-year low in May, while June retail sales surged 9.8% year earlier. Well, the Aussie dollar was already making a little run here to start with, and you can see here this key area here that's been in place, as I like to joke about, that key area has been in place since Moses crossed the desert. This 70.27, you can see it going on way, way, way back here. I mean, it goes, that 70.27 has been around for a while. Look at that. All the way back to 2016, 3 years ago. And look how much it jumped back and forth here. Actually, you can make the case that actually it was even further back, but look at that. It's been around for a while, that key 70.27. And actually was a level that we were looking at on the way down as the Aussie was just going down, 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 down. We said, hey, this is the area that they look like they want to target, the 70.27, and it stayed in place since then. You can see a couple of, when they lost the 70.27, they put up a pretty good dogfight trying to hang on, and finally it relented. As we move lower, obviously the trade talks had their own impact and weakness in the Aussie economy. We made a charge, fell just below the 70.27, fell to new lows recently, made another charge, got above 70.27, but we couldn't close the deal as far as the daily close, and we fell back this last week coming into Fed's pal's Humphrey Hawkins testimony, or what it used to be referred to as Humphrey Hawkins back in the day, which is his congressional and Senate get together. And then, of course, we had all the Fed speak, and obviously now the market's pricing in a 25 basis point cut, fully priced in basically at this point now. 50, no, not so, but it's opened the door for the Aussie dollar to move higher. And then on top of that, you got some good Chinese data that pushed it higher. The key thing is to close above 70.27. We may just get that. If we get that daily close above 70.27, been saved for a couple of weeks, it opens the door for a challenge up to 71.80. Now, for our bias chart resistance, it's right up here at 70.48 for today right now. So you may see the market take off a little bit. I think we've got some Aussie information that's going to be out also today that's certainly going to go in and have its own impact here with the Aussie later on, but that's going to be in Asian trading here. And just one moment. Okay, and so that monetary policy minutes are going to be out. Look at something else here. Also today we do get, if you're following the Kiwi, we do get CPI today. Well, depending on your neck of the woods, for us it'd be late afternoon here in the States. And then for some of y'all, but anyway, it's going to be 6:45 p.m. Eastern time. I'm on Central, so mine's set up for Central. Okay, so let me just go move this out of the way. Now referencing back here with the euro, um, Kit Jukes was talking about a lot of other people thinking, well, the euro ought to rally. It seems like that would have been the case. We'll move into the daily quickly to give you an idea. One of the things that we talked about in the analysis starting for the beginning of the week that I do under basic technical with Forex analytics. As I mentioned, there's a plethora of different disciplines, whether you're interested in Elliott Wave or harmonics. I post my stuff a couple of times a week under basic technical. Blake does it all throughout the entire week. And also then we have, macro patterns. But I mean, anyway, to get back to this on the euro, what I posted was I was stating here, euros closed a week above the critical 1262 level, but lacks conviction on either side. For starters, we'll need to close above 1285 to generate upside momentum for the bulls. Downside support is 1208 with upside resistance at 1326. Well, we talked about this last week, is that this is that, it's great that they were able to get above 1262, although initially they hadn't closed above it. But the real resistance is, and you can see here, and one of the reasons I'll reiterate that again is I go by the touches or touches, how many touches it comes across, but my resistance is generally by the bodies. I'm not really interested in the wicks. Now you can see the wicks when you get a economic data release, employment, non-farm payroll. Obviously that's the same, but I was going to say, ECB or Fed release, and if the market's really whipping about, then within a 5-minute bar or whatever, those wicks are going to be very important, the top and the bottom. But really, it's the bodies where you see the volume, and you can see how that's been important before. I mean, on the way up, we were talking about that 1285. And you can see here it's bumped, but it has not been able to get above it. So you're thinking, well, golly, the Fed's already being priced in. As Kit Jukes was saying, what the heck's going on here? Why can't we get a bigger rally? Well, it is summer trading, but also another thing that we can go on in reference. You can see here that we're getting after a pretty good sell-off here in the Boons. And, we went to all-time highs here in the Boons. Let's go and take a look at that on the daily. Look at that monster. All-time highs in the Boon market. Look at that. Unbelievable. Which meant, obviously lower rates, but obviously they work inversely. And this is what actually sent the euro tumbling, 2 Mondays ago. Okay. And then, 2 Mondays ago, we were just still marching higher. And then of course, on that same day, we talked about that a little bit later on. The idea was that Lagarde was going to go on and be nominated. That accentuated the move lower. Well, if you look at this now on a 2-hour chart, we saw a pretty good pullback off of that. Okay. You see that? But now things are starting to turn around again. So this is, as we rally back, is assisting in putting some pressure on the euro. Now let's go back to the euro. When one would be thinking, hey, what's going on here? The Fed's already going to go in and cut, or pretty much it's a given. And why isn't the euro getting above 1285 and really moving towards resistance around this 1326? Well, as I mentioned, we have the Boons rallying, which would mean that interest rates are falling lower. And we've got that, once again, that difference. Until the Fed does the cut, until they use an old cartoon thing, or when I was a kid, I remember the guy used to host the cartoon shows. He used to say, until they do the do. Well, until they do the do, which is actually, Fed takes that cut in rates, we may have a tough time trying to get beyond this area here. Well, I mean, I thought we would have at least been able to push above it. We were looking for our bias chart resistance at 1324, but I mentioned, we'll probably see a little bit of resistance here at 1307 if the goose stops here. Well, heck, we can't even get above 1285. So henceforth, you're seeing why it might be perplexing to some as to why we can't garner some more steam. Kid Jukes was saying, man, you thought that this thing would have been moving higher by now, and it certainly isn't. Now, looking over to the cable, after last week, we saw a little bit of short covering, and really I think that's all it was. This cable has been, let's go and put this in here. This cable has just been down in the dumps, to say the least. And I put on here, the cable pairs appears to be taking a few chips off the table for the short covering. It's possible to start the week up to 2667. But you can see here, they quickly start to slide right back again, and so not much of a change here. But as far as the cable, the concerns of what they're referencing today is basically the same old thing. Hey, they're worried about, Brexit, but is that news? Not really. But what we do have coming out tomorrow, as far as some economic data, it says on Tuesday, employment and wage growth data for the month of May will show how the British labor market is holding up. Many economists expect the UK economy will have contracted in the second quarter. So after a little bit of short covering here, and we'll move to the 2-hour chart to give you a little bit better perspective. So after this, now the market's saying, hey, we got that employment data tomorrow, wage growth. You know what? We may just slide right back down. So after some decent little short covering here, the market is just sliding right back. And we've actually come into our bias chart support that we had marked off today, which is 2514. So you can see that. And we also always put it in pink. The reason is because it stands out very well. So when I mark my bar, I don't like to have a whole lot of colors on here. I like the black and whites. To me, it stands out easier. So other than my exponential moving averages, you can see it's been on a buy mode here. And now we're starting to just flip to the sell mode. But these stand out. So I kind of keep these as my intraday bias chart resistance, or in case something moves a significant area where they may go on and pop to. Certainly, we just kind of ran out of gas and rolled right on over. The only other market here that I'm going to reference here on the majors is right here with the dollar CAD. And what a fall we've seen here. So many people were thinking that we were going to go up to 136 and 137. Some people even thinking higher. And that just simply was not the case. But I'll tell you what, it took a long time before the ocean liner was able to turn. And once it turned, it did go on and make that move here. And certainly we've come down here. We had 3043 as our support last week, and we came down into it. We saw a decent bounce. We had 3136 as our resistance, and that had been a support level actually on the way down on a I don't want to say a short-term basis, but we expected a little bit of a bounce. We came down 3136 and pushed even lower. So came, like I said, last week was 3043. We saw a good bounce off of that. And we've rotated lower, and we finished the week just in abysmal shape. So our bias chart support here is 29.95. We're trying to get a little bit of a bounce here, probably just a little bit of short covering. The thing is that the Bank of Canada is still, at least, the Powell's already indicated, hey, they're going to do the cut, okay? And Bank of Canada, at least they're holding off and saying, well, we're going to go and see. We haven't made any decisions. We'll see how the economic data comes. And that's allowed the Canadian dollar to go and strengthen. Now, we're seeing a little bit of a give back today. We've got our bias chart resistance here at 30.77 here. But we posted on here, the dollar CAD closed the week on its lows below support of 30.43, opening a challenge to 29.02. See that on the daily close. Immediate support is 29.95 with resistance at 31.36. For now, the Bank of Canada is diverging from the Fed, providing downside momentum. But like I said, it's a little bit long in the tooth over here, so a decent bounce back is not want to say expected, but would be reasonable. But you'll see sellers come right back in at 30.77, looking for a move lower. We're supposed to get the rate cut, so that's just going to really accentuate that move. So once again, then he moves back to 30.77. You'll have people starting to come back in. Same thing here with the dollar yen. We've revisited those lows. We had our bias chart support this morning at 7.78. That's holding. But I do want to go on and move into the cross rates. So just bear with me. Sometimes you get too many monitors, you can't try to jump around, figure out where I'm going. Look, here's one pair that we talked about on the European crossover webinar. One of the guys was asking about that earlier also. And it's on the starting versus the odd. And you can see here, we've really come off. And obviously with the strength with the odd, it's continued to apply that pressure. So what we had put on here was the starting odd appears inclined to test the 78.47. And that was, obviously this was before the week started. On its way to 77.40. You can see the 77.40 there, big as light. Exponential moving averages are a bit stretched, so strong bounce back on a downside push is a strong possibility. So what I'm referencing here is the space, the gap between the two exponential moving averages, okay? The last time you can see here when we had this, the gap widened fairly wide, you can see here, it didn't, well, we did see a pretty good turn back once it did happen, but you can see the market spaced out. You can see here, look how wide we came up here. So it doesn't mean that immediately the market is going to turn around. You can see right here, look at the spacing in between here, where the market really gets overdone with itself here. But you can see this took place over the course of a couple of days, and then we saw the market get back. Well, as I said, we finally came down here and got to the 61%, and we're pushing lower, but it's on the way down here to 77.40. And look here, down here, you see all these touches? That's some good volume. So my thought being is, and today we have, I think it's today in the Asian session, we have the monetary minutes for the RBA being released. That'll allow us to not only challenge the 77.40 potentially, and maybe even blast beyond that. Well, look how wide the spacing is between the two exponential moving averages. So if we get that and you are short, I definitely would be looking to go in and take some of that money off of the table, or at least tighten those stops on a challenge to 77.40. We may, as I mentioned, blast right through it or push those stops below that. Anyone who's long is, thinking, oh my goodness, I definitely have to have my stops here, or at 77.40 or 77.35 or 30. Here's a little bit more here. Actually, if we even got almost down to 77, we could blast through here, but then I think you'll quickly see some short cover materialize. Now, once again, you've seen it here where the market, we get to these stretch levels. Look at the exponential moving average. But it takes place over a couple of days. Same thing here. Look how stretched it got. It takes place over a couple of days, and finally we start working lower here. And same thing here, not as much as much as before, but you can see here we finally start to pair off. So just so that you're cognizant about that, be wary. Then looking back at the Aussie yen trading in relatively tight range here. Other thing we're going to go and take a look at before we jump off is going to be the guppy. Hang on one moment. There we go. Well, look, this is in some pretty sad shape. And here's what we had done. This is a huge level, this 136. I mean, we've gotten below it. We rallied. We got below it. We've been fighting and fighting. And it looks like they're just giving up the fight. And so going into the start of the week, we had posted here, the guppy has fallen and can't get back up to borrow a line. The 36.02 is a cap on the pair. The market appears destined to test the 34.60, which is the 78%. Well, we know, got that, I always like to reference that, the pound or the cable loves the 78%, i.e., Anacott Steel, or Blue Horseshoe loves Anacott Steel from the old Wall Street movie. Look, the sterling pairs love to go for target these 78% levels. And lots of times you'll see a pretty good bounce back, whether it's to the upside as it's rotating lower, or to the downside, and then we come back up. So be cognizant of that, although right now, like I said, the sterling is so weak, it doesn't mean we're going to see a massive rally or anything like that, but we probably see some decent little bit of short covering if we make this run in here, and we're not that far away here, and the market is just technically weak to say the least. Well, we're in quiet summer trading. Overall, things are relatively quiet. We're seeing even with the euro also continue to press lower here, coming into some support here. Let's take a look here. And in case you're trading this pair, it's a pretty big level here at 59.92. And we'd mentioned here, has closed the week on the lows, opening a move to major support of 59.55. Well, we're looking for the level potentially for the market to get down to 59.55, but the major support level here is 59.92. Now, you may get a little bit of a bounce back, but because the market finished so weak, my thinking is that they'll go beyond this 59.92. How much further, we'll see, but you can see this is what I'd be looking for the market to target, which is 59.55, but big major support here at 59.92. That's all we got here. Gold's kind of holding its own here. Did take a little bit of a dip on a little bit better economic data that came out this morning on the U.S. side. And that's what we have here. And thanks for joining us here on the FX Daily Wrap-Up.